Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the main problems on depreciation. So far 12 problems I've completed till the last video. Now in this video, two more problems, 13 and 14 I'm going to complete. So before that, I expect my viewers to have a printout of the problems which I've given in the link under my descriptions. Always keep ready. Take a screenshot of the solution of 13th and 14th, then I'll explain all the points. Come on, see the 13th problem. On 1st January 2014, Alex had a motor vehicle with the original cost of $17,000 on which depreciation of $6,800 had been provided. So 1st Jan 2014, he is having one motor vehicle, original cost, depreciation. On 1st April 2014, same year, he bought a new vehicle costing $24,000. He sold the one and received a check for $9,400. That means the first vehicle was sold away. Beginning of the year, 1st January, he is having that old vehicle, and that old vehicle was sold on 1st April. And on 1st April, a new vehicle was purchased also. Alex provides debt on motor vehicle at the rate of 40% per annum on the reducing balance basis. He allows a full year depreciation in the year of purchase and none in the year of disposal. Almost in most of the problems we are having this condition. At the time of purchasing, full year depreciation. At the time of selling, no depreciation. Now, required. Prepare the provision for debt on motor vehicle account and motor vehicle disposal account. So, 4 different questions are given, A, B, C, D. One by one we will attempt. In A bit, it is asking you to prepare the provision for depreciation account and asset disposal account. So first we'll make this one, right? Now, first of all, we have prepared Alex provision for depreciation account and asset disposal account. Beginning of the year, 1st January 2014, how much is the provision for depreciation? 6,800. First vehicle. On the first vehicle, 1st Jan 2014, he is having 6,800 provision. And on 1st April 2014, he bought a new vehicle, 24,000. He sold the one and received a check. So whenever an asset is sold, 4 entries I told you, you have to remember those 4 entries. Whenever there is a disposal of asset, sale of asset. Here on 1st April 2014, he sold away. The 4 entries. The first entry will be regarding the transfer of that asset to asset disposal account. The entry will be asset disposal debit and motor vehicle credit. Asset disposal debit. So debit side asset disposal, I am taking motor vehicle. What was the cost of that first vehicle? $17,000. This is on 2014 April 1st. So the original cost of the old motor vehicle is transferred to asset disposal. Asset disposal debit, motor vehicle credit. Second entry will be transfer the provision for debt on that motor vehicle which was sold. The first motor vehicle was sold. On that first motor vehicle, how much was the provision for depreciation? 6,800. That will be transferred to asset disposal. Entry will be provision for debt account debit, asset disposal credit. The provision will be debited. So here debit side, asset disposal. 6,800. This is on 2014 April 1st. Similarly, asset disposal, provision for debt, 6,800. 2014 April 1st. Come on, 2 entries we have passed. First entry, transfer the original cost. Second entry, transfer the provision for debt. Third entry will be cash received. When cash is received, bank account debit, asset disposal credit. So asset disposal, credit side, bank, or you can write cash book also. Bank account. How much is the sale proceed? 9,400. 9,400 receipt. 3 entries over. Last and final entry is regarding the profit or loss on sale. Profit or loss on sale. Now see here, which side is more? Here 9, 10, 15, 16, 200. So here credit side is less, debit side is more. So there is a loss. There is a loss. The loss will be written on the credit side income statement. Loss. Now debit side total 17,000. Here also I am taking 17,000. Now subtract 17,000. 17,000 minus 6,800 minus 9,400 is equal to 800. So $800 is the loss on sale. Balancing figure. It is not given in the problem. We have calculated if debit side is more, credit side is less, there is a loss. That's all. The asset disposal account is closed. Now we end the year. Year was started on 1st Jan 2014. So year will end on 31st December. So on 31st December we have to provide depreciation on the second motor vehicle. One more motor vehicle was purchased. What is the entry? Income statement debit, provision for depreciation credit. This is the entry for charging depreciation. Write it down. Always, I am stressing you, always keep a notebook beside you. The entry for charging depreciation is income statement debit, provision for depreciation credit. The credit side I am taking income statement. This is on December 31st. Now on which motor vehicle we have to provide depreciation? On the second motor vehicle which was purchased during the year. So what is the second motor vehicle purchased? It is given on 1st April 2014 he bought a new motor vehicle of 24,000 and the depreciation per annum is 40%. So 24,000 into 40%. 24,000 into 40%. So here 24,000 into 40 divided by 100. So it comes to 9,600. So 9,600 is the depreciation for the second motor vehicle. So here 9,600. That's all. Now carry it down. 9, 10, 15. 9, 10, 15, 16,400. Here also 16,400. Balance carried down 9,600. This is last date December 31st. Here 2015 January 1st. Balance brought down 9,600. Here carried down 9,600. Here brought down. This is the last day of the year and this is the first day of the next year. That's it. So this is the end of first ABIT, prepared the provision for depreciation account and asset disposal account. Now the next BBIT. What is the BBIT it is asking? See here, prepare an extract from the statement of financial position at 31st December 2014 showing the entries of motor vehicle. In the statement of financial position, we will write non-current assets. In our problem, non-current asset is motor vehicle. So how to show the motor vehicle as a non-current asset in statement of financial position? So here I have shown. Statement of financial position extract at 31st December 2014. Asset motor vehicle. Cost is 24,000. The second motor vehicle that is purchased. First motor vehicle was already sold. The second motor vehicle 24,000. Accumulated depreciation. How much depreciation we have provided on this second motor vehicle? 9,600. Because current year only we have purchased. So 9,600 deduct 24,000 minus 9,600. 14,400 is the carrying value at 31st December 2014. This is at 31st December 2014. This is the presentation of non-current asset in the statement of financial position. C bit. Calculate the depreciation which will be provided on the new vehicle in the year ending 31st December 2015. 2015 का मतलब next year. So how much depreciation will be charged on the second vehicle? So what is the carrying value here? We have 14,400. Because we are following reducing balance method. Reducing balance method means we have to calculate depreciation on carrying value. So carrying value is 14,400. What is the rate of depreciation? 40% given in the problem. The depreciation for the year ended 31st December 2015 is 40% of 14,400. So 14,400, 40% you get 5,760 is the depreciation on the second vehicle for the year 31st December 2015. That's it. Now last debit. Name the two books of original entry used in preparing the disposal account. This is the disposal account. In this account, what are the two books of original entry we are using? So you can see income statement. This income statement we will write an entry in the journal. Book of original entries, journal. Secondly, bank account. Bank account you will find in cash book. So book of original entry, cash book. In cash book we will come across bank account. Similarly, provision for depreciation. This provision for depreciation entry we will pass in journal. All adjustment entries will be passed in journal. Journal is the book of original entry. So by seeing this disposal account, we can conclude that journal is one of the book of original entry and cash book is another book of original entry which are used in preparing disposal account. That's what it is asking. So here two books used in preparing the disposal account are, first one, A, journal, and B, cash book. That's it. These are the two books used in preparing disposal account. That's it. Now I am coming to the next problem. Problem number 14. On 1st October 2013, Natasha Salim started a business altering and mending clothes. On that date, she purchased a machine for $4,000, paying by check. So this sole trader Natasha Salim, she has started a business and the business started on 1st October 2013. And on that date, she purchased a machine $4,000. On 1st January 2014, that means October, November, December, January, within 4 months. Within 4 months, she has purchased another machine for $6,000 on credit from ABC Machines. The two machines she is having. The first machine she purchased by check on 1st October. Second machine, 1st January 2014, $6,000 purchased on credit. She decided to depreciate the machine using reducing balance method at 20% per annum. A whole year depreciation was to be charged in the year of purchase, but not depreciation in the year of sale. No depreciation in the year of sale. On 1st February 2015, that means next year, Natasha Salim decided that the machine purchased on 1st October 2013 was no longer required. She sold it for $2,100 cash. On 1st Feb 2015, she sold away the first machine which was purchased on 1st October 2013. Required. Prepare the machinery account and provision for depreciation account on machinery in the ledger of Natasha Salim for each of the 2 years ended 30th September 2014 and 30th September 2015. Year is ending on 30th September. Year is beginning on 1st October. The beginning 1st October, ending 30th September. Calculate the profit or loss on disposal of the machine on 1st Feb 2015. This is the question, right? So we are required to prepare the machinery account. So you can see here, this is the machinery account and this is the provision for depreciation. We are not making any disposal account. It is not asking. Only two accounts. Machinery account. When the machine is purchased, the entry will be machine account debit, bank account credit. So machine account debit. So I am writing bank. How much is the cost of the first machine? $4,000. It was purchased on 2013 October 1st. This is the machine purchased on 1st October. Now second machine is purchased on 1st January 2014. So 2014 January 1st. It was purchased on credit from ABC machines. ABC machines. The first is purchased on cash. That's why bank. The first machine is purchased by paying a check. So we have done bank. Second machine is purchased on credit from the supplier. Who is the supplier? ABC machines. So value is 6,000. Two machines we have. Right? She decided to depreciate the machine using reducing balance, a whole year depreciation on 1st Feb 2015. First of all, we have to close the year. We have to close the year 30th September 2014. After completing this, we'll come to that 1st Feb 2015. Right? Close the accounting year. So here, 6 plus 4, $10,000. Here also $10,000. Balance carried down. Last date 2014 September 30th. Now next year will begin from 2014 October 1st. Balance brought down, that is 10,000. First year completed. Now first year depreciation has to be provided on both the machines. So entry for depreciation, income statement debit, provision for depreciation credit. So here income statement. Income statement. This is on 2014 September 30th. That is September 30th. Now depreciation has to be provided. Full year depreciation in the year of purchase. So two machines are there. What is the rate of depreciation? 20%. 20% on the first machine. First machine, 4,000. 20% of 4,000 is 800. Plus 20% of 6,000. 6,000 into 20%, 1,200. 800 plus 1,200, 2,000 is the depreciation for 1 year. This is the depreciation for 1 year. That's it. Now we close the year. 2,000. Here also 2,000. 2,000 balance. Carried down. This is 2014 September 30th. Next year 2014 October 1st. Balance brought down 2,000. That's all. So 1 year we have completed 30th September 2014. We have closed the account of machinery and we have closed the account of provision for depreciation. Now during 2015 what is happening? See here. On 1st of Feb 2015, Natasha Salim decided that the machine purchased on 1st October was no longer required. She sold it for 2,100 cash. So whenever an asset is sold, how many entries will be passed? 4 entries. The first entry, transfer the original cost of the machine to asset disposal account. Entry will be asset disposal debit, machinery account credit. So machinery account credit side, asset disposal. What was the original cost of the first machine? 4,000. 2015 February 1st. So first entry, Asset disposal debit, machine credit. So machinery account is credited, asset disposal. Second entry, provision for depreciation. Provision for depreciation debit, asset disposal credit. So provision for depreciation debit side. Asset disposal. How much is the provision for depreciation for the first machine? Here you have written 800. 800 is the depreciation provided on the first machine. That will be transferred. This is 2015 Feb 1st. That's it. 2 entries are over. Now third entry will be cash received. The bank account data to asset disposal. But we don't have bank account, we don't have asset disposal. Leave it. Last entry for profit or loss. Profit or loss means income statement to asset disposal or asset disposal to income statement. We don't have. Leave it. That's all. So now we close the year. We close the year 30th September 2015. So first of all, here, September 30th. So we'll find out the balance. 10,000. Here also 10,000. 10,000 minus 4,000, 6,000. Balance carried down. This is September 30th. Now here 2015 October 1st. Balance brought down 6,000. Here carried down 6,000, here brought down. Which is the 6,000? The second machine. The first machine was already sold out. The second machine 6,000 is remaining balance. Now come to provision for depreciation. How much is the balance? 2,000 is on credit side, 800 on the debit side. Now we'll balance it. 2,000. Here also 2,000. 2,000 minus 800 is 1,200. 1,200. But we have to provide depreciation, no? We have to provide depreciation for the second machine. Depreciation is to be provided on the second machine. So income statement. Income statement. So this is on 2015 September 30th. Now on which machine we have to provide the depreciation? Second machine. And which method we are following? Reducing balance method. Reducing balance method. So second machine. The second machine was 6,000. And first year depreciation provided is 1,200. So 6,000 minus 1,200, 4,800. So 20% of 4,800. This will become 960. So 2,960. Here also 2,960. From 2,960 deduct 800. So 2,160. Balance carried down. This is last date, that is September 30th. Now here 2015 October 1st. Balance brought down 2,160. That's it. This is the provision for depreciation account. So 2 years, 2014 and 2015. That's it. Now last question. What is the last bit it is asking? Calculate the profit or loss on the disposal of the machine which was sold on 1st Feb 2015. How much is the profit or loss? See carefully. Proceeds of the sale 2,100. It is given in the problem. The machine was sold for 2,100. From this we deduct what is the book value of the machine. The machine was purchased for $4,000. The machine was purchased on $4,000. And depreciation provided during the first year is 800. Depreciation provided on this machine is 800. So 4,000 minus 800 is 3,200. So 3,200 is the book value of the machine. And this 3,200 worth of machine was sold for 2,100. So there is a loss. How much is the loss? $1,100 is the loss on the sale of machine. That's it. So this is the end of problem number 14. So totally 14 main problems have completed.